All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for Monday night, October 12th, 2020. And we had an amazing follow-through day today. And the trades we framed last night in the strategy podcast all did pretty well today. So you were well postured to the upside if you had a chance to listen in. All right, so let's see what we have here. And just take a look at the 10-day look-back period. So we made a new 10-day high today, and our 10-day low was made about 8 days ago back here at 330, which is located down here between today's PSAR and what will be tomorrow's PSAR flip at around 332. We're in obviously the upper end of the 10-day high, and we're approaching the 30-day high, which is also an all-time high up here at 358.75. So it's been quite a rebound off of this 11% sell-off. This has been about a 10% recovery. We've gone from summer into fall, into winter, a reversal here. Here's the crossing of the baby dragon and the RLXD. This is the supported spring crossing location right about here at 336. And then we've had 6 really strong days of follow through. Winter has become spring, has become summer. We're a little bit advanced above the RL10 fair price. So this was really kind of a remarkable move, a big gap up and strong follow through on large range. I think this is pricing in the Democrat victory. And the clear winners today were in Techland. So let's just see what we have. The move to the upside, we're already now at Z2. So we've gone from Z3, essentially, all the way up to Z plus 2. And we are within spitting distance of the RL10 peak and the 30-day high, all-time high. And then the Z3 at 362.5. And then peak Z3 ever over here, 365.64. Well, peak Z3 on this since the sell-off of March. This is the highest Z3 excursion. So getting past 365 would be really quite amazing. But all it has to do is what it's just done in the last 10 days. So stranger things have happened. The dragon has reversed and rolled up. The RL30 has rolled up, and now here's the extension of the RL30. This is the projection of the PSAR dots. This where winter became spring is approximately the SSC crossing. The owl would be a little bit further up, where we'd want to see the dragon and the RL30. So that's like a bar later. This would be the owl in this region if we were looking at patterns. The entry on the that entry that we've been looking at where you are where you're tracking that descending PSAR, and you notice that this PSAR just continues to drop down here. Well, this is where the PSAR flips. So the PSAR -1 would be this little price level here. So if we were tracking that little front running technique, this is where once the RLXD hits, this is about where that entry would be. So it front runs the SSC by a couple days and front runs the owl, which would be here. So this would be approximately the price level. Gives you a micro improvement. And the PSAR flip gives you plenty of protection. This little adverse sell-off here didn't even get through the spine or the bottom skin of the dragon, much less the PSAR. So there's some reasons to pay attention to that trailing PSAR entry. So there we are. I mean, cautiously optimistic, all systems go. Here are the sectors today. I forgot to put the little boxes on. So there's the S&P at 1.6. Here's the Dow at 0.8. The Russell lagged at 0.67, and Treasuries gave a gain of 0.32. So that's actually a bit of concern in my view, because last week we had seen those gains being produced by the Russell and then the Russell mid caps, MDY, and tech was lagging. Today we're going to see the gains were in tech, and then the other more speculative U.S. indexes lag. So this was a more narrow focused upward move. And so I never need another reason to be cautious, but that's a good reason to be cautious. And that's why today for me was an intraday exploiting day and not additional swings. The swings that I have are still in place and the stops are adjusted, but I'm not adding new swings yet. So because of this narrowness of the market. Let's find the sectors that did better than the S&P. So the S&P is here at 1.6. So we have the Ackman hedge fund at 2.14. Let me increase that a little bit so you can see. We have XLK, the tech, at 2.73, and then we have no other sectors except the triple techs up here, with TQQQ at 9.3, really decisively outperforming TECL, which is three times XLK. So the symbols that worked. Apple, we're going to see that intraday trade. We've been banging the drum on that one. Apple, Twitter, Amazon, Google, NVIDIA, the FANGs, Microsoft, Intel, Tesla. So the only non-techs that outperformed the S&P from our watch list then would be Wynn, Caterpillar, and Goldman. Everything else was tech heavy, and no other sector outperformed the S&P. So that's, for me, that's reason to be a little bit cautious going into tomorrow. The sectors that underperformed: discretionary 1.3, Brazil 1.2, finance 1.1. Pardon me. Emerging markets 0.87, healthcare 0.68. There's the Russell again. Commercial real estate 0.44. Japan energy and oil exploration around 0.25, I should say. Going into negative territory now. Materials and silver and wheat and precious metals and Mexico between 0.17 and 0.73. Clean energy, a disappointment to me today at 1.25. And oil itself down 2%. So the sell-offs were Virgin Galactic minus 4%, really. Devon Energy 2%, Nikola 2%, DuPont 1.5%. So it was a much broader based underperformance today. Only the techs were the biggies today, and so that makes me cautiously optimistic for tomorrow. I'm still going to be managing the swing positions. I'll still be looking for large directional moves, but the narrowness of this move today speaks to its tactical nature, in my view. All right, let's look at some trades of interest. So this was the TQs. They started the day strong. They had the strongest upward gap and had the best follow through the rest of the day. So I did not play the immediate run up of the gap. I was playing Apple. So it gapped up, sold off back, and I treated that as the winter, and then traded the supported spring crossing. I was quick to get out of it, so the first one was a scratch. Bottom ticked. It bounced off of the Bollinger Band mean, so I re-entered quickly. And again, I'm using the PSAR dot, or the PSAR flip as the risk box. Come on. It held support here at the VWAP and the Bollinger Band mean, and when it took out the previous Z3 and this peak, I added a second. Everything in the market started taking off right about here, and all the techs were strong. So I quickly got a third position in, and then just enjoyed those three, and in about as orderly a move as you could want, and just took the managerial exit here on three positions. So with a risk of about 50 cents and entering around 148 and exiting around 152.5. This first position is about 8R. This one's about 6, and this one's probably 5. So that whole package is 20 execution R on the first that first wedge right there. This pullback came and held support at Z2. I considered being short this, but I did not want to be short the triple leverage strongest sector in the entire watch list. So I just waited, and it gave us a supported spring crossing again. This is about a 25 cent risk. And again, I was able to get three pretty quick positions in. But as we were getting close, we were in the lunch period here. After this excursion beyond Z3, with three positions in, I didn't want this third entry to go negative, so cashed everything here. So off the first leg, this is about 1, 2, 3, 4. This one's probably 2, and this one's maybe a scratch. So this collection is about 6 execution R to go with the first 20. And then this was just a single position, again, an orderly pullback to Z-2, supported spring crossing, about a 50 cent risk, and cashed 1 or 2 are there. So TQQs made my whole week today. That was a pretty good trade. The next one up was is Apple, and this looks very similar as you would expect. But Apple was the one that I was playing the hybrid frog right from the get-go. This one kind of got away from me. I captured a fraction, followed by a resumption and a supported spring, scratch, fractional loss, supported spring, scratch, supported swing. This one took off. This was at the same time I was getting those three positions in on TQQQ. So I was watching those both pretty close side by side, and the trades basically just paralleled each other. And the both exits happened around the the 11:45 Eastern with the managerial exit, a re-entry, scratch, a scratch, a scratch, and this was a bit of a grind. I got a little bit off of this one, but I was quick on the trigger because I was a little mentally tired from the gains in the Qs and plus this one here, so I was a little quick on the trigger. I was able to relax and make a little bit on this last one. Finally, later in the day, had so this was the afternoon session. Brazil was green for the day, but did not have the same kind of runaway move in the morning that the techs did. I was pretty much just a tech player all morning. So this was the winter and then the supported spring crossing in the usual way. This is only a 5-cent risk box, so I'm expressing this in terms of multiples of the execution risk. It wouldn't offend me if you used 5 cents as your execution, and then 25 cents for your position sizing risk, or even 40 cents. But this one made a nice orderly move past Z3. It went through. The VWAP turned into spring, past the previous Z3 pinch, past the RL 270, held support at the dragon, resumed. So I added my second position in the usual way. It gave me a push near Z2, a push beyond Z2. This one almost, but not quite beyond Z2, and started to sell off. That should actually be a blue box. Sorry. That's the give back, and this was a nice orderly managerial exit right here. The sell-off continued through the winter. It was a bit of a Z3 pinch breakout. Winter rolled over, became spring. RLXD, PSAR flip. That's just a standard SSC kata number 1 in EWZ, and that returned a couple R. And that was the afternoon trade. So I felt very opportunistic today, very much, coyote style, where I am grabbing what I can and not holding a lot overnight, just traveling light and carrying this back to the den, and protecting those gains when I can, and not carrying a lot of overnight risk. All right, let's shift to the daily report. Get you some targets here. So you have time to prepare. Let's see, we've already gone through the health check. Oops. And review. Shapes. Rectangle. All right, we remain in bullish normal conditions. We are back to significantly overbought on every dimension. Look how strong the breakout was today. This is the idea behind the NDX. So a 131 on a 10-day NDX means that if we took a look at the size of the previous 10-day range, this thing broke out 31% of that higher. It closed 31% higher. So you take roughly 31% of that 10-day range, tack it on top of the previous 10-day high, and that gives you a sense of the magnitude of the breakout. And the 3-day NDX at 193 tells you it doubled the size of the previous 3-day move. So now you get a sense of how large that move was. Yeah. Okay, back to the drawing board. So here we are. We're back now at the percent stretch above the 200-day moving average is back to double digits. It's 13.16. ADX started to get just a little bit stronger again to the upside today. It's now back up to 18.3. So that says that there's still plenty of room for this to become a full-fledged long-term trend. ATR percentage 1.69. The risk Z is now pointing to risk on, as we've just nudged into the green. So this could be like this. It could be a runaway move. I think this one is the more likely one as we get closer to election time. Latin America is signaling as a overreaction short, meaning that if the S&P decides to start getting weak here again, that Latin America would be the first place to go to start exploiting weakness, because it had been the laggard. You can see the min pain candidates, the max pain candidates, still a strong persistence of energy stocks in there, because you have XLE, the energy sector, you have XOP, oil exploration, along with natural gas and oil itself. You got Devon Energy. Still a handful of dojis today in the Dow. Let me let that come up on your screen. Handful of dojis there. There's an overreaction long on Amgen. Oops. Yeah, there's overreaction on Amgen. It's also number one on the auto framer and Max Payne's. IBM still has a nice move to the 10-day high available. Notice just the number of breakouts in here on the NDXs. That'll give you a real hint. How strong Caterpillar was. It broke out on the 6-month as well, as did Procter & Gamble, which we've been beating the drum on, and Visa. So all goodies. 4 dojis among the ETFs. Gold, Latin America, silver, and industrials. Let me let that come up on your screen. Treasuries were up for today and are offering 6.7 on the auto framer. An enormous number of great big breakouts, some including some all-time high breakouts there too, that are worth noticing. Just a few auto framers, because we're so close to that 10-day high, there's just not a lot of room. So these tend to be ones that had sold off sharply before and are still recovering. So IBM, Merck, Amgen, and treasuries there. The daily squeezes, even though today was an expanded range, there were a lot of the non-techs that had tight ranges, so there could be some nice breakouts here tomorrow in, I'd say, Home Depot. Treasuries are of interest, mid caps, small caps I like. XLB suffered today, so this may be one where we can get some follow through tomorrow. And anytime I see Brazil, that's just one more reason to be interested in Brazil tomorrow. Summer, we're back into being dominated by the summer season again. Lots of goodies to choose from in here. Procter & Gamble, United Health, and Caterpillar, great big breakouts in every time dimension. There's just no resistance overhead. And in fact, we looked at all 3 of those this weekend, and they all had great big follow-throughs today. So that was gratifying. Consumer discretionary doing really well. EFA is doing well in sympathy to the U.S., I would say. And even emerging markets had some nice payoffs. And that's everything I wanted to cover for today. We got plenty to choose from tomorrow. I still think this is a tactical trader's market. I am not going to change that opinion until we get through the elections, until we can see what the shenanigans about calling the winner are going to be. I haven't seen a single plan that is compelling yet. And the Supreme Court hearings were just an abomination today. And so we are in for some tactical volatility here in the next 3 weeks. And so I'm just going to be trying to make hay while the sun is shining and making bank and locking it away in the den for a long, harsh winter. And I'm going to continue to play that way until we can get through the election and look for an orderly transfer of power. Until then, there's just too many things to justify holding long-term positions, unless you're going to take more than a 2-year position on things, in your mind, where you're thinking like, again, clean energy and the big fat techs. I think they're postured to survive. But otherwise, I don't see anything in that intermediate time frame that's worth taking the risk on. Okay, that's everything I got, guys. Take good care. We will see you in the chat room tomorrow. I posted the masterclass slides on Patreon today. Also, there was I did not get a chance to do the audio recording of the Q&A session for the hybrid, but the question list was pretty straightforward, so I answered it in writing and posted that on Patreon for you to review. Okay, so take good care, guys, and we'll see you in the chat room.